Hey soldiers, it's a high probability that Bitcoin investors in the United States will soon get a Bitcoin exchange traded fund. Now, I know some of you may be thinking, hey, well, wait a minute, isn't there already one? There are Bitcoin futures exchange traded funds, which trade futures contracts, but you know that's extremely volatile and based on a derivative of Bitcoin. And that's something that experienced investors are usually much more adept at than your average retail investor who just wants some participation in a given asset. In the case of what we're talking about today, it's crypto and specifically Bitcoin. Now, why is the Soldiers of Finance channel talking about Bitcoin or crypto? Well, guys, look, I have had a revelation. No, I do not own Bitcoin. I do not own any crypto, but I have had a revelation. I was a young person when the computer revolution started to occur, very young. And I would hear things from the people in my family, the elders in my family. They would say, get into computers. Now, that's all they would say. They didn't know what the hell computers did. They didn't interact with any computers on a daily basis. They just knew that computers were the future in some way, shape, or form. They had no idea that you wouldn't be able to get through a day without a computer. They couldn't see that. But they could see that it was the future and that children should accept it, glom onto it, be heavily involved in it. My mother bought a computer for us one Christmas, and this was a great big deal because she had to lay it away. We weren't working with a lot of money coming up. And it was a TRS-80. You actually connected it to the television and you did something old-fashioned called basic programming. Beginner's all-purpose symbolic instruction code. And you could do basic things like make things repeat on screen. It was archaic, all right? But it introduced me and my brothers to computers and got us acclimated into that world. That was our first foray, okay? From then on, you know what happened. Computers took over the world. We went from a point where people couldn't imagine what the hell you would need a computer for to, again, not being able to get through a day productively in the West without one. So here we are. Then, also saw this happen. Started to see a lot of people that were older than me get left behind. They didn't understand computers, okay? A lot of them were close to retirement, so that saved them. I remember my aunt. She didn't work with computers in her career, and she bought a computer when she retired, and the mouse just blew her mind. You could see that she was just amazed by doing this and having it translate into something on screen. There was another revolution that occurred, the internet revolution. That whole thing came in. That left even more people behind. It separated the wheat from the chaff, economically and otherwise. And I don't want that to happen to the Soldiers of Finance. So I know a lot of people are uncomfortable with crypto, but we see major governments making moves with digitally based currencies. We see more and more major institutional investors, banks, and corporations starting to integrate it into their everyday operations. So I don't know what it's going to look like at the end of the day, 20 years from now, but I do know that in some form or fashion, we will be dealing with digital currency. And so it brings us back around full circle to the Bitcoin ETF. Not a Bitcoin futures ETF, but a Bitcoin ETF. So this could wind up being significant for those who are currently trading in cryptocurrencies, Bitcoin specifically, and for those who want entry in an easy way into this asset. I don't think you're going to have to worry about digital wallets, crypto exchanges, or any of that. I don't think that I know that people who invest in this are not going to be looking to actually spend Bitcoin at any particular retail outlet or for any particular purchase. but are just going to be looking to enjoy the ride up, as it appreciates in value, if it does that. Okay, if I had a crystal ball, I'd be talking to you right now from my Gulfstream jet. Last week, the price of Bitcoin notched an 18-month high, climbing to $37,970 after BlackRock took the first steps toward an Ether ETF. The price of Bitcoin has more than doubled since the start of 2023, but it's still well below its November 2021 peak. I think everybody knows that these cryptos are volatile, okay? They change in value throughout the day, okay? And Bitcoin has been going up, but it has seen better days also. But look, you could say that about plenty of assets. I want to be fair. At least 9 asset management firms, including BlackRock, WisdomTree, Valkyrie, and others, are waiting for Securities and Exchange Commission approval to issue a spot Bitcoin ETF. Experts say that could happen around early 2024. And for ETF investors, this would be the best product on the market. Best product since the last one, right? According to Brian Armour, Director of Passive Strategies Research for North America at Morningstar. All the other options right now have flaws to varying degrees. All right, so he's obviously got a vested interest in it. He's biased. Of course, with anything, including this Bitcoin ETF, when it comes out, you're going to need to do your due diligence, okay? It could offer less risk than holding a Bitcoin, possibly. Again, this is an area where not only do you need to do your due diligence, but you also need to accept the fact that this, like many assets, is one that is going to be constantly evolving in some way, shape, or form. So I would be very reluctant, okay, excuse me, give you the exact opposite scenario, gold. Unless something drastic happens, there is an asteroid called Psyche that is somewhere out there in the asteroid belt that they say is so chock full of gold, maybe so chock full of gold, that if we ever got our hands on it, it would destroy the entire economy, okay? The price of gold would be worthless if we ever got our hands on that one asteroid. And if that asteroid is filled with all that gold, then you can bet it's not the only one. So, who knows, right? Remains to be seen. Taking that out of the equation, gold is something that really hasn't changed in 5,000 years. It's held its value, right? That's what it's supposed to do. Hedge against inflation, holds its value. You don't need to keep checking in with gold. What gold doing today? What's it doing today? No, hold it, and it's not something that's going to shoot up in value. We better hope not. Like a stock or a share of Amazon or Apple or Google or something like that. We're not going to see that from gold. But so it's less volatile. Okay. Bitcoin is the exact opposite. It is very volatile, and you do need to keep your eye on what's going on with that asset on, I would say, if not a daily, at least a weekly basis. That's what I would think. That's what I would do if I held it, okay? There are other issues, like people always wonder, well, what about when if the power goes out? And you know what? That's a valid concern, but I will say this. If the power goes out, like we have a real deal disaster where a gamma ray burst, well, that would be deadly. Let's say a solar flare hits the earth and causes an electromagnetic pulse and knocks out electricity on half of the planet, okay? If that happened, I'm going to tell you right now, you're not worried about financial assets. You're worried about eating. You're worried about staying safe, okay? And we always talk about prepping. You should have some food and a means of defense at your disposal. So the power concern is not in my top 10 for Bitcoin if I held it, okay? Because quite frankly, you could say the same thing about shares of any stock. Well, yeah, I own 100,000 shares of Google. Again, if half the planet is out of power, who cares? I can't do anything with it anyway. If the Securities and Exchange Commission signs off on a spot Bitcoin ETF, Armour anticipates a batch approval with multiple ETF listings on the same day. He says, I would expect them to rule on spot ETFs holistically because most issuers are taking similar approaches. All right, so you'll see more than one. You'll have more than one choice. So if you like BlackRock, if you like Fidelity, you'll probably have options either way. So 72% of financial advisors said they would be more likely to invest in crypto if spot ETFs were approved in the US. This is according to a NASDAQ survey of 500 advisors. They also say you should limit your cryptocurrency exposure. They say the same thing about gold. Okay, you should never have all your eggs in one basket. Saying as much as, a lot of these experts are saying 5% on the high side for allocation to crypto in order to minimize downside exposure, it still remains an extremely volatile and speculative asset. And of course, your risk tolerance is going to depend on variables such as your age, okay, such as the kind of work that you do, or, whether or not you have other obligations like a family, okay, and you can't afford to see any asset take a 20% nosedive in one day. Okay. So again, it all comes down to personal due diligence. These advisors are saying 5%. They'll probably say more, like 10, 20%, if they can make some money off of it, right? These ETFs will help them do that. Guys, look, let me know what you think. What's your ideas on crypto in general? Do you think this is something that we need to become more comfortable with, even if we have no plans in investing in it? Let me know, guys. I'll talk to you soon.